Okay, good evening, everyone. Welcome to another episode of Sequoia Enterprise Solution Training. Tonight, we are going to have case studies to share with everybody what we have done in the year of 2026. So, as you can see, bring your eye, we are already in the middle of March. So, tonight, we're going to share with you the cases that we closed and hopefully to give you a little insight or give you a little idea what kind of deal that you can go out there to look for. Okay, so let's dive into it. Since January 1st, 2026 until today, until the end of February, right as said, we have closed quite a few different type of deals, mainly single family homes, land deals, working capitals, construction loans. Those are the four main type of deals that we have closed, and the dollar amount is somewhere ranging from 43,000 to about $1.7 million. So a lot of you asking us, hey, what is the lowest dollar amount that we can fund? For any real estate, for example, like single family homes, apartments, so on and so forth, we don't want to go anything lower than $100,000. However, if you're talking about working capital, you're talking about equipment loans, those we can actually go down to somewhere around $30,000. Okay, so let's go into the different cases. Um, Cash out, single family cash out. This is still a dominant business in Sequoia. I believe that for the last 2 months, we closed approximately seven or eight single family home cash out. We either is cash out or purchase. So this type of loan is what I call the low-hanging fruit. People understand it. People know what it is. There's a lot of investors out there are purchasing or refinancing this type of property. A lot of real estate agents are helping investors to purchase this type of property. So it's pretty popular. So the, the only type, as I mentioned one more time, the only type of loans that we don't do, if you are purchasing this property as a primary residence, then we do not touch. But however, if you're purchasing the exact same property, but use it for investment purpose, for Airbnb, for short-term rental, or even for daycare. We have clients that purchase single family home to open up their daycare business. So as long as you purchase it using as a business purpose, then we can do this thing all day long. So for this particular client right here, again, he has multiple properties. He needs to do a cash out. The property it's already free and clear. That makes things much, much, much easier, right? However, for this particular one, the challenge that we face, the clients in Houston, Texas, that he is a business owner and he had a SBA loan against his business. So when he applied for the SBA loan, and he utilized his own property as a collateral. And that is pretty normal in the SBA world because when you go get funding from SBA, they're looking for collaterals, whether using your own primary home as a collateral or any investment property, or sometimes they will ask you to purchase an insurance as their collateral. So in this case, this client has his investment property as the collateral for that SBA loan. Now, the good thing is that he already paid off the SBA loan. So as we all know, when you pay off a loan, you have to record it from the county. You have to get some sort of release to show that this property is free and clear. So while we are doing underwriting, and we found out that the lien is still on the property, the SBA loan is still on the property, and we can, even though it's paid off, but we still need to have the lien to be released. So we contacted SBA. But if you remember earlier this year, the government shut down for approximately what 4, 5, 6 weeks. So that is what the delay was. So for those period of time, we cannot get a hold of anybody SBA, and there's nothing much we can do about this. We just have to keep waiting and waiting and waiting until the government reopen. We contacted SBA, and now finally we were able to get the SBA lien released, and hence this property can go into closing. So the reason that I want to share with everybody is because every single case it presents its own challenge. It could be big, it could be small, but rarely you will see a case that go from A to Z very, very smoothly. It just doesn't happen that way. There's always some things happen. There's always some challenge that we, our processing team, have to deal with. So luckily for this one, we finally got it closed. Gave him $195,000 cash, and he can use that money to do other investments. So again, uh, DSCR loan, this is what we call the DSCR loan, right? Debt service coverage ratio. DSCR loan, it's a very low-hanging fruit. And again, for those of us who just came into commercial lending and you don't know where to start, my suggestion to you is to look into clients that are purchasing investment properties. Work with real estate agents. Work with loan officers. Quite frankly, a lot of loan officers, they cannot get deal closed in their own shop. So like this one, if this one were in a traditional loan company, most likely they cannot get it done, and they would just bypass this one. So talk to loan officers. A lot of them, if they cannot get a deal done, let us take a look at it, right? And another good resources for you to tap into are title companies, because they close deal all day long. They know, who are the investors out there that purchasing this type of property. Go become friend with them. Go network with them. Okay, so DSCR loan definitely is the low hanging fruit. This type of loan in an ideal situation. Okay, ideal situation means that, hey, things that we can fix pretty quickly. Normally takes between 30 to 40 days to get it closed, pretty quick. So I strongly suggest, if you are new to the commercial lending world, look into this type of loan. Okay, so that's the first one: single family, cash out, purchase, or refinance. This one is another Houston, Texas deal. It's a piece of land. Yes, we do provide funding for land. However, land, it's a very unique type of asset. There are many different type of lands, right? You have raw land. People purchase a piece of land, have no idea what they want to do. You have agricultural land. You purchase a piece of land for growing crops. You have cattle, chickens, whatever that you raise. That we do have some clients that purchase land for that purpose. And of course, most of the land that we've seen are development land, meaning that they purchase it, they develop it, and they will uh, build some sort of structure on top of it. So this client right here owns a piece of land. I believe that this one values somewhere around $2 million. Now, for land, understand one thing: for land, they do not provide any income unless your agricultural land that you either you grow crops and you sow those crops, or you rent it out to farmers who farm on that piece of land. That's a totally different story. But if you're talking about development land, the land that was ready to build, those lands does not provide any income. So the maximum LTV that any lender willing to provide is somewhere around 50 to 55%. Very go up to 60%. So somewhere around 50 to 55%. And in some cases, for example, like raw land, meaning that has not yet developed, then it go all the way down to 40%. So just remember. Now, a lot of the traditional bank, it doesn't want to provide land loan unless they know very, very clearly exactly what is your exit strategy, meaning that after you purchase it, what are you going to do? What are you going to build? How are you going to utilize this land? And it's not an easy transaction for traditional lenders. However, on the alternative side, there are many local lenders that know the area well, and they are willing to provide funding as long as they know the market. So, for example, this one right here, we have a local lender that looked at this deal. They like that they know the piece of land is in a very good area. The surrounding population, it's actually growing. The community is growing. There's a lot of construction happening in that space. So for this one, they provided approximately $1.05 million for that piece of land, and it's about 50% LTV right here. Okay. Now for land, normally it's a short-term investment, a short-term loan, meaning that the lender normally will give you somewhere between 9 months to 18 months, somewhere around there. They don't want you to hold on to the land for too long. They want you to really exit, meaning that really to start to build. And most of this type of loan are bridge loan, short-term loans, right? Interest only, short-term loans. Now the interest is quite expensive, no doubt. Okay, interest is somewhere uh, uh, north of double digits, between 10 to 12% interest only. So, but however, when this particular client right here, he needed the money for development, meaning that he needs the money for drawings, engineering surveys, appraisals, get the land ready for build. So it's necessary for them to uh, get this type of loans and get the funding that they need to move to onto the next stage. So land is very important when you go out there to talk to a client about land. Most importantly, you ask them, what is your exit? What do you want to do with this piece of land? Is this piece of land entitled, or is it just piece of raw land? Does it need development? So on and so forth. So in order for us to determine how to structure a loan for a piece of land. So this one is in Houston, Texas. Now this one is also another piece of land. This one is Millbrae in California, somewhere in the Bay Area, close to the airport. Now, obviously, the location is fantastic, no doubt about this. But for this particular one, the challenge is that the owner is a foreign national. He does not live here in the United States. He's actually overseas. The land is also free and clear. His job, I mean, this piece of land is already actually on. He sold this land already. It's under contract. He's just waiting for the buyer to get the loan through. But however, it just takes a long time. Again, that is what we expected anyway. Um, so he needed some emergency cash for his business. He cannot wait anymore. So he came to us asking for a bridge loan, asking for a piece of land loan. The land itself is no problem. We also, again, this is in the Bay Area. A lot of lender love this type of loan, this type of asset. So getting him $550,000 on a 1.1 million dollar piece of land is not an issue. The issue is that he himself is actually living in overseas, and he has no bank account in the United States. He doesn't have anything here in the United States. So what we end up doing is that we require him to set up an LLC because lender does not want to fund any asset under a personal name, and especially if you're foreign national. Just because of, if something happened, meaning that, hey, if he's not paying back the note, he needs to go to take the land to go into foreclosure. There's a lot of laws and regulations a lender has to follow, and if the piece of property is under a personal name, it makes it very difficult for the lenders to serve that person, to get him onto the court, for foreclosure. But however, is the piece of property is under an LLC, that will be much easier. So what we end up doing is that we ask him to set up an LLC here in the United States, and also he needs to set up an LLC. It's set up a bank account under that LLC. Now, both of this can be done without him coming into the United States. There are a lot of banks, a lot of CPA out there that can help them to set something up like this. So that was okay. So finally, we got those things done. However, at closing, because he is all the way in other countries, we cannot find a title company is willing to do. There's two portions, right? So the first one is that we cannot find a title company they are willing to do online signing because the risk is pretty high. A lot of title company doesn't want to do it. So that's the first thing. And then the second thing is that our lender does not accept any online signing. So we have to ask him to come back to the United States. So I remember the signing is on Monday. He flew in on Saturday, got here over the weekend. He signed on Monday, and he left the country on Tuesday. So that was a challenge for this one. But again, we were able to get this one done. Land deal. Now, the land deal, the good thing about land deal is that it's very fast. It does not require a lot of underwriting. As long as the value is there, a lot of this private lender will just write a check. So this one right here, we got to close in 2.5 weeks. from the time that he submitted to us to the time that he actually approved, put it this way, approved the loan. So after that, he has to buy the ticket, come back to the United States, so on and so forth. So that take a little bit of time. But from the time that he submitted to the time that we approved it, it's about 2.5 weeks. Okay. Next one, what we're going to talk about, it's SBA loan. We have done amazingly for the last 2 months, we closed quite a bit of SBA loan. This one is a restaurant here in Maryland, is in my neck of the wood, right? So here's in Maryland, the client owns a restaurant already in operation, but he needed funding to renovate the bar area. So we gave him $334,000 just based on the his income, his business income. Okay. So the challenge for this one is not about his business. It's fine. His business is fine. It is the construction because he hired a private contractor, and sometimes some of these contractors does not have license, or they think that they don't need license to do a particular job. But once you get into SBA, they are very, very detailed about everything. So for this project, they look at the contractor's bid, what kind of work that they need to do. So then they see, oh, you need to change electrical. Oh, you need to change plumbing. Oh, you need to do this. So now they ask the contractor, hey, do you need license for this? Does the owner of the building agree for you to do something like this? So long story short, we have to get consent from the owner to agree for all these changes to that project. And for a few particular item, the lender have doubt that license is not needed. So what they end up doing is call the county themselves. And when they call the county or when they call the city, and of course the city will say, yes, I do need the license. I mean, again, they want to cover their behind. And obviously that is the right answer for them to say. But actually it does not require a license for something like this. So they have to dig into the construction code, that the contractor has to dig into the construction code, so on and so forth, to prove that this type of work does not need license. So that, I mean, again, it's a learning experience for myself. Also, we've done quite a bit of SBA loan and we never experienced something like this. So that is, again, for something for us to learn as well. So SBA loan, we can definitely get it done. If it were just a working capital, meaning that there's no construction involved, that will be much, much easier. Working capital is that, hey, I need the money to purchase inventory. I need the funding to hire staff. Those are easy to do. But now, once you come into construction, and I didn't expect that the lender will actually call the city to find out a lot of these different items and end up causing the delay. But eventually, we funded this client $334,000. That is the SBA working capital. And now this one is also interesting. This one is also here in Maryland. One of our client, my client, is an SBA construction loan. So when this lady reached out to us, I didn't expect that a loan like this can actually get close. She had an idea where, well, I shouldn't say idea. She purchased a franchise to build a facility that trained athletes to go to one of this Ninja Challenge show. I'm sure that a lot of you watch the Ninja Challenge, right? So they do all kind of crazy stuff. So she got purchased a franchise that built a warehouse to do something like this. So definitely she has no experience of running a business like this. But the good thing is that she's purchasing a franchise. So the franchise would provide training material or provide training for him to guide her through the entire process. So after some discussion with the lender, and of course the lender looked at the package, uh, meeting with their committee board, with their credit officers, so on and so forth. And of course, even though the lady does not have experience in running this type of business, but she has extreme experience is running other businesses. She used to be a CMO for a company. She used to be a CEO of another company. So her other experience definitely helped in this particular case. So, long story short, she the $1.7 million she used that to purchase a piece of land, and also we gave her money to build the entire facility. No, sorry, this one he she purchased a warehouse. Okay, she purchased a warehouse, and we also gave her money to build the entire warehouse to suitable to train ninjas. So this one, the biggest drawback on this one, or biggest challenge on this one, is permit because this is such a unique property, very unique property, very specialized property. So you can imagine the construction is very specific. So she has to have multiple meetings with the county, with the city, to make sure that they approve what she's trying to do. It took a long time. It took her about 6 months to get all the permit that she needed. In the loan side, the loan was actually approved long time ago. It's approved. So as long as she can show the permit, then we can fund. And it's the permit that takes a long time. It took, as I mentioned, it took about 6 months in order for her to get the permit. But finally, she got it. It was a surprise for all of us. Very excited about her, her project. And one of these days, I would like to drive up there to see what the construction looks like. Okay. So again, SBA construction loan, and yes, we are still funding SBA. We are doing a lot of SBA loan right now, but probably many of you already know SBA changed their guideline, starting this month, March 1st, and onward until whenever, right? So right now, the new guideline is that in order for you to get SBA loan, all the principal in the business has to be U.S. citizens. Before, you can be a U.S. citizen and a green card. I can still get your SBA loan. But from now on, it has to be all U.S. citizens. So when people come up to you asking for funding for working capitals, for purchasing a business, purchasing a franchise that has nothing to do with real estate, and you think that it might be a good candidate for SBA, the first questions ask them, are you a U.S. citizen? Okay, if they're not a U.S. citizen, then we need to look for other ways to get him the funding. But if they're a U.S. citizen, then obviously SBA it's the first choice. Now, what other option that they have? There's another type of loan called merchant cash advance. This is not my favorite type of loan, by all means. Okay, I don't like to do this type of loan, but every single type of loan exists has its own purpose. So for merchant cash advance or short for MCA type of loan, this is a very fast money for somebody that needs funding very quickly to serve to put out a fire, to resolve an urgent case. This type of loan is normally fits the purpose. Now, the bad side for this type of loan is the interest is very high. They're just like a credit card. Okay, they don't care about your personal credit score. They don't care about your tax return. All they need to look at is last 4 months of income from your business. So we need to provide 4 months of bank statement to show what the total deposit is. And based on the deposit, then they will provide the funding for the business. Okay. Now, obviously, the bad thing is high interest. It's just like credit card. If you talk about credit card, imagine the interest rate is somewhere around what 28, 32%, or sometimes even higher. And because of the high interest, this type of loan will not allow you to pay on a monthly basis. You need to pay them back on a weekly basis because that will be a lot manageable. Now, this type of loan is good for company or businesses that has daily income coming in, daily income, restaurants, doctor's office, dentist office, mechanic shop, so on and so forth. Okay, you got the idea. They have income coming in every single day. So that's why on a weekly basis, when they pay, the weekly payment is a lot more manageable. A lot of the other companies, such as constructions, commission-based companies such as real estate, this is not the right loan for this type of company because they don't have income on a weekly basis. Sometimes they will get a one lump sum a month, but then they don't have income for the next 2 or 3 weeks. So definitely, this is we need to see what type of industry in order for us to provide this type of loan. But for this something like this, um, it serves a purpose. It's to put out a fire. So this case right here is in Fremont, California. The client owns a restaurant, and he needed $100,000 ASAP. When they say ASAP, meaning that they need the money yesterday. And quite frankly, there are a lot of clients, a lot of businesses out there are like this. So normally, what I suggest a business to do is that, hey, when do you apply for a loan? It's when you do not need a loan, meaning that your business cash flow is strong, you're doing good. However, you don't want to wait until the last minute to get a loan. It can become very, very expensive. So the way to do it is that you establish a relationship with the lender, okay, with a lender. So when you are doing good in your business, hey, you want to get out a loan for 100,000, 200,000. It's a lot easier for you to manage, but you establish that relationship with the lender. So when the time comes that you need money immediately, now the lender already know who you are, and you already have the history, and they are more than willing to give you money because they already know who you are. So again, that is what I would suggest you as the consultant when you go out there to talk to the client, and many of them say that I don't need a loan and things like this. For all business, remember, business is like this. It's not a matter of they need money or not. It's a matter of when they need money. And most of the cases when they need money, they need it now. Okay. So as a consultant, one of our job is to educate our client to prepare for their fundings, to prepare for their capitals. So this is merchant cash advance. Next one, this one, um it's cash out DSCR. It's just very similar to the first one. As I mentioned, we close quite a bit of this type of loan on a monthly basis. So this one again, the client it owns investment property already. He needs extra cash to purchase other investment property, cash out. So I mentioned there are business owners that are green card holders that they're no longer able to get SBA loans. But when they need money, what happened? One thing that we look into is that, hey, do you have any investment property? And if you do, that will be the perfect scenario where we can extract cash or cash out cash from an investment property and give them that money to do their business. And that way it's much cheaper because if you are working capital, for example, for SBA loan, you get a working capital SBA loan. You know what the interest rate is right now? Right now is always prime plus 2 to 3, somewhere around that number. The prime rate right now is what? 6.75. If you add 2% to it, that's about 8.75. And the long term, it's approximately 10 years. Okay. Now, however, if that client has a not primary, has an investment property that has enough equity inside of it, now we can take out the equity and give that money for the clients to do their business. Now, normally this type of loan is what, 30 years. And interest rate in today's market, assuming that credit score it's 730 and above, LTV is somewhere around 70%, DSCR somewhere around 1, we can quote him somewhere around 6.25 to 6.75, a lot cheaper. And it's 30 years, which means that the monthly payment will be a lot lower. Okay, so there's another way for us to seek funding for our business. And perfect example, there's another case right now, as a matter of fact, that we are working on right now. A client that it's a manager working in a restaurant, and he would like to purchase that restaurant. Now, if we were going SBA, it's going to take forever because now, we need to look at the business, the business income. We need to look at his own income. We need to look at the profit and loss statement. We look at the financials, so on and so forth. And it takes about 60 to 40 to 60 days to get this thing closed or even longer. But luckily, he has an investment property that's free and clear. The value somewhere around $500,000, if I remember correctly. So we can, from that $500,000 home, we can give them 7% LTV, which is about $350,000. And he can just use that 350 to purchase that business right out. I believe the business is for somewhere around 290, $300,000, somewhere around the range. And then the rest money, he can still use it for working capital. So that's another way for us to, you know, generate a loan or some sort of cash for our business owners. So that's what Sequoia Enterprise Solution is all about. That we look at the client's situation and see what they have on the table and provide solution for them. So that's what we do. Okay, so this one again is another restaurant development. This is another restaurant development, and he already purchased the building, and he needs to have funding to renovate the building. So for this particular one, instead of getting an SBA loan, why is because he does not own that restaurant. He purchased a building, he rented out to someone who runs a restaurant inside of that building. So it does not fit for SBA. Now remember, SBA is for you to operate a business yourself. So for this one, we cannot do it, and we have to do what we call a commercial real estate cash out. We look at the value of the property and we cash out from the property and gave him that money to do the renovation. So this this type of loan is very similar to DSCR. We look at the income. We do not look at the client, the owner, the financials, because the income is from the rent of that building. So all we looked at is the rent, the lease, and then based on the rental income, we calculate a DSCR, and then we give them the funding for it. Okay, so this one it's pretty straightforward. There's not much challenge on this one, thank God. Just other than the normal stuff. But I want everybody to see what type of loans that we are able to do. Okay, what type of loan? So absolutely commercial lending for this one. Okay, this one, oh, okay. So this one, same thing. This one, it's an office building. Okay, the office building, it's all rented out. They have strong income. Oh no, sorry, this is not just an office. This is the bottom floor is a retail with a supermarket, and then on top it's a office space. So the entire building is commercial. So this one, same thing, just like the other one, needed the funding. Uh, he needs the funding to renovate the building. So we look at the value, we look at the income, we look at the rent roll. For commercial building like this, the most important thing that we need to look at is two things. Number one, we need to look at the rent roll. Now, the rent roll, unlike residential rent roll, residential normally when somebody that sign a lease, how long they sign a lease? 1 year, right? Maximum 2 years. I don't see anybody who sign more than 2 years. So residential is different, but in commercial it's different. Commercial is they signing a long-term lease. Most of them will sign a 5-year lease. Some of them will even sign a 10-year lease because once your business is in there, you don't want to move your business around, right? So from the lending side of it, we will look at how long those leases are still left. So, for example, not the restaurant, the retail on the basement, no, on the first floor, it's just a one unit. It's occupied the entire first unit. So let's imagine if that grocery store move out, how easy is it for this clients to put another tenant into that space? Not overnight. It might be months and months and months before they will see a new tenant, right? So from the lender's perspective, it's not just about the income. It's not just about the income. It's also about how long that income will last. Okay. So many consultants come to us saying, oh, this building, it's beautiful. This building works very well. I mean, this building has a lot of income. I should be getting a very good rate. That's not true because even though today you get a good income, but if all the leases will expire next month, from the lender's perspective, there's a high risk for them. Meaning that, hey, what if the worst come to worst, all of these tenants do not extend their leases? Then there's no income from this building. So that is how they underwrite, right? So they look at the lease also. And that's why we ask you to provide a rent roll. The rent roll would tell us when the lease start and when the lease will end, and are there any increase on the rent by a year by year. So those are the information that we need to see from the client. Okay, so once we evaluate the rent roll, now we have a better idea, is this a good deal or is it not a good deal? So that's the first thing that we need to look at. The second thing that we looked at is the operating statement, meaning that, hey, you have a building right here. What is the cost for you to maintain this building? Repair, tax, insurance, management, so on and so forth. So we need to see what the operation cost would be. So once we see that, then we can calculate a DSCR, and then we can come up um, uh, with a program for this particular client. Okay. So now, normally for something like this, there are many different ways to do this. The first route we can go with is definitely the bank loan, the agency loans, right? So this this type of loan, you can get the best interest rate out of it. Best interest rate. Imagine you go to a bank. So if a client can go to a bank, I will always say this, right? If a client can go to a bank and get a loan, there's no need for them to come to us. Honestly, no need to come to us. Even though we can do the exact same thing, match the interest rate, it will still be more, it will still cost more to the client to come to us than go to the bank directly, because we still have to charge our broker's fee. That's how we make money, right? So if they can get a loan from the bank, definitely can do so. Now, if the bank cannot do it, well, the good thing about bank obviously is the interest rate is low, but the bad thing is it takes a long time. It takes a long time, and they see a lot of things, constantly asking for document after document after document. So a lot of seasoned investors, they don't want to deal with the bank. It's just because it's just very frustrating to deal with the agency side of it. And our side is the alternative funding, a lot easier, a lot less underwriting restrictions. But of course, the rate would be higher than the bank. If they're looking for the bank rate, definitely. I mean, we can do it. Okay, we have a lot of banks that we work with, but just prepare them that it's going to be a long process. Okay, so ladies and gentlemen, those are all the things that all the cases that we closed, type of cases that we closed, and just want to share with you what the possibility is out there. There's so much business that we can go to. There are a lot of clients, a lot of business owners that still need help. As long as you can share with them what you can do, you'll be surprised what you can find out. So again, until next week, I thank you for your attention. I thank you for you to watch this video. And if you have any questions whatsoever, you know how to reach out to us. So until then, see you next time.